Good morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Vakil. Before we get on to the F&O Show, let's get in Nikunj Johari, who's standing by with what the Economic Affairs Secretary, SC Garg, has to say about the weakness in the rupee. Nikunj, it looks like the Finance Ministry is putting up a brave face right now.
Right. According to Economic Affairs Secretary, the government has enough firepower to fight the volatility in rupee, and the current volatility in rupee is not so sharp as compared to currencies of the other economies. According to Garg, the government has enough foreign exchange reserves and can opt for having another FCNRB deposit scheme to shore up its foreign exchange reserves if it thinks that if it finds out or it assesses that the current capital inflows are less than the current account and remittance deficit. So this is one of the measures that the government can take to control volatility in rupee going ahead. And he also said that the current situation is much better than what was the case in 2013, where the rupee had touched its lifetime low, and the current situation. In the current situation, the capital inflows are much better than what they were in 2013, and the foreign exchange reserves are nearly double of their levels in 2013. Remember, in the week ended June 15, foreign exchange reserves were about $410 billion as compared to about $289 billion back in 2013. Over to you.
Nikunj, did he mention anything about the crude prices, which have also been weighing on the rupee?
Right. According to the Economic Affairs Secretary, the first spurt in oil prices was due to the demand-supply mismatch, and a similar such event could again happen when the Iran sanctions kick in, the way the Americans are claiming it to be, further exerting pressure on rupee.
Okay, Nikunj, thanks for joining us and bringing us those details. And the entire market is going to watch out for the change in crude prices as well as the way the rupee has been panning out. So that's as far as the commodities and the currencies are concerned. But let's now shift focus to the futures and options trends. Navneet, what are we spotting?
Well, it looks like a good start to day one of the new series. We've started the July series today and we're off to a positive start. Let's just pull up the Nifty futures as well as the Bank Nifty futures and see where they are currently trading. We've seen the spot Nifty actually breaching that mark of 10,650. It's still around that level, but the futures is trading with a discount of almost 5 points. Pull up the Bank Nifty futures and let's check where they are trading. So both the frontline indices futures are trading at a discount, which may not be a great sign, but what's auguring well, at least for the markets today, is that the India Volatility Index, that's cooled off quite sharply in trade. India VIX is today down nearly 4.5%. Most of your sectoral indices have been trading in the positive territory, with metals leading the pack today. So the Nifty Metals Index has seen good gains, at least in the first half of the session. That's trading with gains of almost 2%. Let's quickly tell you what's happening with the option side of the market. If you look at the July series, the maximum concentration is at the 10,600 put and the 11,000 call. So probably that's the range that we are watching out. That's the open interest change bar there on the screen right now, which is telling you that there is put writing which has been seen on the 10,600 strike. I think that's added nearly 5 lakh shares as we speak, whereas on the call side some bit of addition has come in for the 10,700 and the 10,800 strike. So watch out for these strikes in today's session. Just to tell you, there's something new in July series, and that is that 46 securities, the list has been given by the exchanges in the month of April. They will be physically settled if you don't square off your position in the July series. So watch out for this one, and as we await more clarity from the exchanges how the short positions will be cleared. From the FI's front, how the setup is looking, well, clearly the bias is on the short side as they are net short on index futures, and also if you look at the options data, they've bought more of puts.
Okay, Navneet, so we really don't have as much time, so I'm just going to talk about 3 stocks right now in terms of activity. First one is IndusInd Bank. Can we pull that up right now? We're seeing a surge in OI, and along with the fact that it's starting to see some weakness right now. So while it did start off the day in the green, we're starting to see the July futures adding in terms of open interest. The second one is NIT Technologies. There isn't a single week And every second day, we speak about NIT Technologies continuing to advance by 1%, 2%, and a surge in open interest. That is once again the case for NIT Tech. It's looking at longs there. And we've seen a little bit of volatility in IDBI Bank, but a little bit of a U-turn in today's day of trade. Let's pull up IDBI Bank as well. It's up 10%. An increase of as much as 12% in open interest. So a lot of investors and traders are going to be really curious about what's going on with IDBI Bank and whether or not we can take, well, longs or shorts in that case. So we're going to discuss this with our experts as well. But these are the three stocks that I'm watching out for in today's day of trade, Navneet.
Okay, and we'll try getting some view from our experts also who will be joining us in a while. But before we get them on the show, here's a reminder, if you have any queries in the futures and options market, you can call us now on 022-4540-4141. Write to us on Twitter, Facebook. For the ones watching our show on YouTube, you can write your queries there as well. Just don't forget to add the AskPQ hashtag. Let's welcome our F&O experts then. Thakkar of Anand, Rathi, and Navneet Daga of IIFL Wealth are here with us. Good morning to both of you, gentlemen. Navneet, if I could come to you first and take your view on day one of the July series, how's the setup looking like? We've seen some positive start coming by, but both Nifty as well as the Bank Nifty futures continue to trade at a discount.
Hi, good morning. On the first day of we are seeing a good amount of traction coming in, largely led by what is happening with the global markets. But if you look at the entire setup and the way we ended up the series, I will call it as a kind of a more painless and trendless series, whereby we managed to be in the 100 points band the first 20 days of the series, and then suddenly in the last 2 days we have seen almost 2% of cut in the Nifty. Largely what is happening in the global markets as well as the kind of a depreciation on the INR's front is keeping the markets participants on the edge. To my understanding, the kind of a rose data that I've seen and the kind of a setup that I'm seeing from the FIS side, it's making me believe that the rally on the upside would be short-lived, and those rallies should be used to be on the short side of the market. Look, we have been advising caution, and we have been suggesting that the mid cap or the breadth of the market has not been catching up. Even the markets are moving up. That's a terrible sign for the markets. And the first day of the expiry, you're starting at a build-up at the money option of 10,600 on the put side, which is a good sign. But however, if we happen to start to trade below 10,600, to my understanding, there will be much more forced pressure which will be coming from the markets participants. So to my understanding, I'll use any rally on the upside to be on the short side of the market.
All right, Jay, good morning to you as well. Do you also believe that this marginal gain that we're seeing this morning is just that quiet before we start seeing more downside on the benchmark indices?
Hi, good morning to you. Now, as we all must be knowing that, July series or July month historically has proven to be quite positive, and we have seen good returns coming in the July month. So today's July series is the first day of July series, and we're already seeing an uptake. So hopefully, I would say that till yesterday's lows aren't broken, the probability based on the stats that July month will be a positive month. The series have started with a positive note now, so hopefully, with that as a base, I would say one can buy, placing a stop loss just below the yesterday's low. If yesterday's low gets broken, I would say yes, this was just a dead cat bounce, bull trap, and thereafter we would see a sell-off. So, but then see, in markets you have to take risk based on the certain PNC and stats. So, based on that stats, I would say since markets are quite oversold, not markets, I would say rather, the stocks are quite oversold. There might be a probability that in this series we might see just a bounce back of the same. So, no signs or indication as far as the derivative data or the technicals, I would say. It's just purely based on the stats. I would say that since Nifty has taken a support at 10,550, we might see Nifty continuing its range of 10,550 to maybe the upper end of the range that comes to 10,900. Risk reward is definitely in favor of the bulls right now, as the 10,550 is just few points from the current market price, and if it goes to 10,900, we can see significant upside in stocks.
10,900 is the resistance which Jay is talking on Nifty. Navneet, you have a strategy on Nifty future for the day where you're recommending to sell. What are the target and what's the stop loss that you're recommending?
Look, as we have spoken about, basically our thesis is basically to our understanding, no major data point is which is making me believe that the up move would be there in the market, which would be beyond 10,700 to 10,850 levels. These are the levels that I've been watching on the upside. If we happen to cross about that level, then the entire thesis of being short in the market will change. So to my understanding, any up move should be used as a selling opportunity, and we are getting that 100 points bounce from the lows from the yesterday. To my understanding, 10,650 to 660 levels, one can look to initiate a short. But I would suggest that it would be very volatile because of overnight Q's global market. So one should trade with the strict stop losses. Now 10,700, to my understanding, which was acting as a previous support point, now would act as an important resistance zone for the higher side. So one can keep a strict stop loss at 10,700. I'm looking for the market to fall down below back again 10,550 to 10,500 levels.
Okay, let's just focus to stocks then. Jay, what stocks are you betting on today's job trade?
I've been bullish on pharma, and Lupin, I still think that it has one more leg on the upside. For the short term, I believe that we can see one more leg on the upside on Lupin, and technically it would be a wave 5 on the upside. Derivatives point of view, I have seen a good rollover happening in the pharma stocks, and that was the sector in quite a good move in the last series, and this series we might see a continuation of the same. So I think Lupin is a buy for a target of 935 with a stop loss of 885. M&M, I think seems to have consolidated quite a lot in June series after having rallied initially in the June series, and I think it's been one of the outperformers in the auto pack. So M&M is likely to see further uptake, and the short-term target comes from 935, so one can buy this with a stop loss of 887.
Okay, so those are two long calls coming in from Jay. Navneet, what about you in terms of individual stocks? What are you recommending?
Look, I've been carrying forward this kind of a trade in the stocks like BEL and BEML. These two counters have been my favorite on the short side. The entire June we have been playing around on the short side, and the trade have been working well. To my understanding, these stocks are in terribly bear market category. The stocks have been largely been looking to be sell and rise, and if we are and breaking below the supports level. To my understanding, the BEML is still looking weak to me. 800 was our immediate target on that stock, and it has breached below that level and made a low of somewhere to 780 odd levels. It's giving a small bounce towards the 810 odd levels. One should look to be a short side and place a stop loss on the high side of 835. I'm looking at the stock moving towards 760 odd levels in this coming week itself. The second stock would be again some kind of a resilience is visible in the stock like of Yes Bank. I'm surprised the kind of entire banking within the banking universe, the stock has been held up very smartly, and some kind of accumulation is visible. The stock has not been able to fall below the 328, 329 zone on the future side. So to my understanding, this is giving signs that some accumulation is there, and if there is any small positive traction on the upside, the stock will be the one which can fire up on the upside. So to my initial target would be 345 with a stop loss of 325 on the lower side.
All right. Well, I'm going to quickly shift to queries because we're kind of running out of time right now. But let's address HUL right now. First question comes from Nikhil Raja. He's bought the HUL futures at 1652. His question is hold or exit. But he's also sold the 1640 call and the 1680 call to hedge his position. So this is an interesting strategy here from Nikhil Raja. I'm going to take this over to Jay. Jay, firstly, your view on Hindustan Unilever, and what do you make of the strategy that Nikhil has employed? And I'm just going to repeat it for the sake and the benefit of our viewers as well. He's gone long on HUL at 1652, and he has sold the 1640 call and the 1680 call. Jay, how would you help Nikhil here?
I would like to know if he has sold 1640 and 1680 call options, and at what premium he has done that, because in order to understand what would be the risk reward, because HUL, according to me, has formed a clear rising wedge pattern, and which is a bearish reversal pattern, which means that HUL is likely to inch towards the levels of 1500 and at least for the short term 1570. So, from the yesterday's closing price, there is a risk of almost 32 points. So, if he has pocketed that much premium of 32 points, I think it's fine. He is hedged. I would say. But if not, then I think he's at risk. He might just exit from the strategy. So would like to know the premium at which he has sold it.
Okay, thanks a lot, Jay, for that advice. We don't have the premium at which Nikhil has actually written both those calls of 1640 and 1680. But let's move on to the next query. And this one comes from Mohit, who writes to us on... Okay, I'll just go back. Nikhil has just written to us, Jay. His total premium is 37 rupees on those calls.
Then I think he's hedged completely. So I think he can continue to hold on to the long position. It's just that 1658 and the stop loss, or I would say rather the costing would come down from 1658 to near approximately, if you just deduct 40 points from there, so 1618. Till 1618 is hedged, and I would say he can further continue to ride on to his long positions till 1570 levels are held. Below 1570, I think there's a major risk for him.
Yes, Nikhil, you can hold on to your position. That's what Jay is recommending. The next query comes from Mohit. He wants a view on Nifty 10,700 put strike of the July series. Navneet, I'll come to you for this one. He's not mentioned if he's taken any position, but he just wants a view on the 10,700 put. Would you advise him to take any bet here?
I think we're going with the assumption that he wants to buy this put.
Yes, but he's not written anything categorically. So any view here?
Basically, it's difficult to make a judgment whether the gentleman is looking for the bias on the upside or downside. But however, I've spoken about the kind of a view that we have on overall setup on the market, and we believe that those who are looking not directly on the future side, those one can look to buy the put options and play the downside on the market. So to my understanding, 10,000 rather than taking a 10,700 put, one should look to buy near the money put somewhere near 10,600. And simultaneously, since the walls are quite high, I'll say that one can look to create bear spreads rather than directly buying it on the option side. So to my understanding, overall setup until 10,700 is not even taken out. One should look to be on the buying on the put side and either directly going short on the futures.
Okay, there you have it. That's the view coming in that specific put. That's the 10,700 put. Let's move on and take the next query from Tejas W. Kumar. His question is on Tata Motors. He says he's bought Tata Motors at 266. Should I hold or sell it? Can we take a look at the Tata Motors futures right now and see where they're trading at? 267, not too far. And okay, so the underlying is up as much as 1.2%, but this one has seen a tremendous weakness over the previous few days. Open interest surge of as much as 1%. Jay, how's Tata Motors looking to you on the charts? Is there more weakness in store for this one?
I think, yes, the weakness might just continue. See, the reason is that Tata Motors has been continuously trading in a downward sloping channel. So I would say the way the stock has in fact taken a good support at the yesterday's lower end of the channel, there can be some bounce back. So if you have bought in anticipation of a bounce back, then I think that bounce can continue towards the levels of almost, I would say on the upside, 274 initially, and thereafter 279. So I think, see, you can place a stop loss at 262 and 261 rather, I would say, and continue holding his position. But then this buy position or long position should be just in anticipation of a bounce back, which is done it rightly, targeting 274, 279. That's it. Nothing beyond that. One shouldn't look at Tata Motors right now of having bottomed out, because there are no such signs right now wherein I can say it has bottomed out. Those signs will only be about 310 levels. So this trade should definitely be a very short-term trade with a really strict stop loss of yesterday's swing low of 261.
Okay, keep a strict stop loss of yesterday's low in Tata Motors position if you've taken of 261. The next query from Tata Motors, I think we'll move on to Tech Mahindra. One of our viewers has got 700 call strike of Tech Mahindra. He's not mentioned the premium he's paid, but he's definitely suggesting that he's making losses out there. So if you look at the underlying, I think it's somewhere trading around the levels of 640 or 642, and this is the out of the money call strike. The premium of 700 call strike is currently somewhere about 7 rupees or thereabouts. Navneet, assuming he's making losses, that's what he's mentioned, what would you advise him to do? Should he hold on to the position? Because Tech Mahindra has been quite volatile in the last 2 sessions.
It's kind of a surprise kind of a stock. 2 days back, we have seen the kind of the stock is trading near to that 52-week high mark, near to 720 odd zone, and it's seen a very sharp reversal from that zone. and we have seen a continuation of a downtrend in today's session as well. So to my understanding, it's kind of some kind of an informed selling which is going on in the stock, and since it has broken below some very crucial support zone of somewhere near 650 odd, to my understanding, the bounce back is very difficult to sustain on the higher side. So to my understanding, if it's still a start of a series, I'll say that if somebody can maintain a stop loss on the future side levels of closing below 620 odd, I'll play for a small bounce back, but there's likely chances that one should look to exit in that bounce back rather than being holding on to the stock on the underlying call options. To my understanding, if the one should trail stock, one should look at the stop loss level of 620 on the lower side. If that's been taken out, one should look to immediate exit, or either wait for a bounce towards 650 to make an exit.
All right, there you have it. That's your view on Tech Mahindra. We'll move on to the next query, which comes from Saptarshi Mitra. I think we have time to just take one or two more queries. My producer is telling me. Saptarshi Mitra says he's bought the ICICI Prudential 380 put for July at 17. Should I hold or exit? Let's take a look at these ICICI Prudential 380 puts, see what premium is it's currently trading at, and take a look whether or not there is more weakness or is there more strength. In the meantime, can we take a look at the futures at least? In the meantime, while we pull up that specific put, let's also take a look at the futures and see where ICICI Prudential's futures go. Up 1% at 374. The 380 put has been, bought, so I'm assuming that it's in the money right now. Navneet, I'm going to come back to you on this one. What's your view on ICICI Prudential, and what would you advise Saptarshi should do?
To my understanding, it's a good trade, largely because ICICI Pru again was kind of forming some kind of a bottom formation near 380 odd zone. It has broken below that zone, and it's now started to show some kind of a weakness. And the more the stock trades below 380 odd zone, the chances that it might see a further more grind towards the level of 360 odd. So, but the only condition to this point is basically someone who's bought the put options. It's not quite liquid one. Even I'm looking at the ask bid also. It's looking likely that it's 1.5 rupee ask bid on the put options. So one should look to exit on a down move towards the 360 odd zone and keep a stop loss if the stock trades above 380. To my understanding, there's a greater chances that we see a levels of 360 on the future side, and it will give a good exit on this put options.
Okay, that's ICICI Prudential for you. It's trading with gains of 1% right now. I'm just going to take one query from Facebook. Kinjal has written to us, and Kinjal wants a view on HPCL. Remember, the oil marketing companies have been reeling under pressure this week. Today, there's been some bit of respite, but in particular, HPCL for the week is down nearly 15%. I'll just club that query. Somebody also wanted a view on BPCL as well. So, Jay, I'll come to you. What are the thoughts on HPCL and BPCL? Jay, that's for you. View on HPCL and BPCL, stocks which have corrected this week. Do you see any fresh trades that can be taken here?
The question is to me, right, Navneet?
Yes, Jay.
I don't think so, there is any fresh trade as of now, because crude continuously is rising, and until there is no sign of reversal out there. I mean, we have definitely seen this, prices coming down on account of crude prices internationally going up. And when you look at the chart of crude oil internationally, there is no such sign of, topping out or, any reversal out there. So I would like to avoid till that happens.
Yeah, somebody's taken a position on BPCL 410 call strike, and I think that viewer is making losses there. What would you advise?
I think one should exit to, avoid the further losses.
Okay, well, we've completely run out of time, guys. So we're going to try and take as many queries as possible in the subsequent shows. But with that, I'm going to thank both our experts, Navneet as well as Jay, for being with us, being patient, because we did start the show a little late. And of course, thank them for taking some of our viewer queries as well as giving us their views. But with that, it's a wrap on this edition of the F&O Show. But lots more lined up, so stay tuned in the Bloomberg.